All right, welcome back, traders. John Caruso here for November 18th. It's Friday. Happy Friday to everybody out there. We've got a lot going on right now in the market. You've got all these interesting dichotomies in policies that seem to be diverging. One that stands out, well, actually two that stand out the most are this less hawkish talk by the U.S. Fed this week versus this more hawkish talk that's going on within the ECB. Over the past week as well. So you've got that dynamic that's starting to play out right now in the currency markets. That's why we've seen some weakness in the US dollar and we've seen some near-term strength in the euro. Will that last is the question. When I look at the charts here in the euro, we're sitting about 103.75, down slightly on the day here. There is pretty strong resistance, overhead resistance in the euro that comes in up around 105. That's right around that 200-day moving average. And of course, the top of our dynamic range, and similar with the USD, except on the inverse, we're looking for perhaps some consolidation down along the 106 level before perhaps we build a stronger foundation. We start to move back to the upside in the USD and downside in the euro. So there's that dynamic that's playing out right now over the near term. And gold, how that kind of fits into the mix here. Gold has actually given me an immediate term oversold signal here today. Now, whether or not we test a little bit lower down to that 1740 area remains to be seen in the gold market before maybe we catch another run back towards that 1800 to 1820 level. That all remains to be seen. So that's an interesting kind of dynamic that's playing out between the USD, euro, and gold from here. Also, the other dichotomy that we're seeing in policy is we're seeing a divergence in energy policy between OPEC, between the EIA, and the IEA. They are all forecasting very different things in terms of demand outlook, and we're starting to see that play out right now in crude oil this morning. Crude oil prices down 3%. Back below 80. We did caution a lot of our traders when we broke the 81.50 level that was a very big level for crude oil prices to take out. And sure enough, we're seeing the floodgates open up here this morning back to the downside in crude. Should find some support along 76, 77 in crude. If we do catch a bounce into immediate term overbought levels, might be a good opportunity, might be a good selling opportunity if we do bounce into immediate term overbought levels, which would take us back towards about 83, 84 in the crude oil market. So we're going to keep that in mind as how we navigate that market. If crude were to somehow retake $89 to $90 a barrel, well, that's going to flip our chart back to bullish trend, and at that point we could probably play for another bounce to 93.50 up to 98. But right now, the dynamics that are playing out in crude, we think, are supportive of further deterioration in price. Of course, all of this can change if China decides to potentially pave the way for a reopening process at some point. But at the moment, with their COVID cases increasing over there, I don't see that as a higher probability over the very near term. So that's what we're looking at here today. Best of luck to everybody out there. I hope everybody enjoys the weekend. Take care.